Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shell Bhatnagar, and this is Market Today, the last 1 hour trade of Samvat 2080 for you on Business Today Television. And we will be helping you understand with the top market experts who will be joining right in. What are the strategies that you should now adopt for the new Samvat, that's 2081, that will be starting with Muhurat Trading tomorrow as well. Good afternoon to all our viewers and good afternoon, Shell.
Good afternoon, ladies and gentlemen. It's not turning out a day that we had originally planned for, and perhaps it's the monthly expiry of the FNO, which is creating all these selling pressures. Nifty, it's just slipping. I have no other words to express this. We've tested a previous low of 24,078. Perhaps that is about to be tested maybe today or tomorrow. But 24,181, 159 points down. The primary loss-making units are today the IT stocks, TCS and Infosys, Tech Mahindra in particular, as far as the Nifty is concerned. Banks are also slipping, 51,350 on the Nifty Bank, down about 1%. The IT index is down at 3 percentage points. So these are the two pain points as far as Nifty is concerned, and of course it is its own monthly expiry, so added selling pressure which is coming upon it, except for one stock in Nifty, which is L&T, doing superbly well post its quarterly results, and of course the guidance that it has given. You have Vari Energy, which is 8% higher, recently listed, and only two stocks are doing well in the Nifty, which is Cipla, up about 9.8%, L&T up about 6.5% in the cash markets. We have Tata Power doing phenomenally well. You would have heard the management on Business Today at 10 o'clock talking about robust expectations for the coming 2 quarters. There is absolutely nothing that I'd like to mark on screen except for fact that volume is pretty dull, and I'll tell you how. HDFC Bank is down 0.3%. Only 1,188 crores worth of shares have been traded. So the fall is there, but there is no, how should I say, juice in this fall. Sakshi.
Absolutely. Time to then welcome our guest on board with us. Mr. Sunil Subramaniam, market veteran, is now joining in on this special broadcast. Warm welcome to you, Mr. Subramaniam. Here's wishing you heartiest wishes for Diwali and the upcoming New Year as well, to you, to your family members, to all your loved ones at large as well. Tell us, what is it that you picked up as one of the key lessons from Samvat 2080 as an investor, and what is the new approach that you will have for Samvat 2081?
In this year, the learning has been to smell the money. So I think, for years I've been a fundamental investor, a value-based investor, trying to look at future cash flows, the fundamental businesses. But what has the market taught us is, the paise wale jo karte hai, usko samjho, and then you act accordingly. Because in the short run, money dominates. In the long run, maybe fundamentals and earnings will dominate. But if you are then to have a smooth journey, you can't say, I feel it, shut it, forget it, right? You have to take care of the short term also. So I think smelling the money, understanding where the flows are coming from, what are they likely to buy, what is the thought process, that I think has been the biggest takeaway in the current year.
Right. Namaste, Sunil ji. Festive greetings. We've always been blessed by your presence, your wisdom, and of course your foresight on the long side. Some of the best performing mutual funds were under your tutelage over the last 15 years at Sundaram AMC, and we hope that this is not something that you will give up in exchange of momentum, and as there is quick commerce, there is quick trading as well. But money in the long term has been made only by buying quality stocks, and this is something that we have learned from you. Now tell our viewers, how do you see the structure of the market with this October turning out to be one of the most disastrous months that I can remember? About 10.5% cut on the small cap index, 8 percentage point cut on the Nifty. Do you see this sell-off continuing in November, or is the worst behind us?
No, I don't think the worst is behind us, because I think the US election uncertainty will persist well into November. I think the result either way would not be, market would have to take time to react to. So I'm saying that emerging markets will be starved of capital in the coming month, because US treasuries being where they are with a strengthening dollar, and FII sitting in the US would have a very, very tough decision to put money outside when he's making risk-free money without risk of capital erosion due to currency. If he steps it out into the emerging market field, he has to take care of both the things, that he's losing up on the opportunity cost of that yield. So I'd say because of the elections, it's going to continue to be a volatile period for overall emerging market equities. And India, notably, for India, two things add to the confusion. The first is the fact that with geopolitical tensions, oil is always on the tenterhooks. One day Israel strikes, oh, they spared the oil fields, oil recovers. Another day they say US supplies, inventory is down to record low, oil rises. So in a winter period, for a hugely 85% of our oil requirement is imported, our economy and hence the markets are unduly sensitive at this point in time. That's the second point. And the third point is that Diwali happens to have come at the end of October. So this festival season number is not out in the open today very clearly. What we have seen companies talk about is how September went and a broad guidance. So people are stocking up the shops like the auto companies, but whether they are getting sold will be known only when the data come out in November, and these earnings will be known only in January. So domestically also there is uncertainty on what, and mind you, this is a very crucial quarter. Why? This is the quarter in which the market shifts focus to FY26 from FY25. So they're looking for guidance. They're looking for triggers. They're looking for where is that, but that trigger is, I think, not comforting enough at present based on the earnings that come. So market will take. So I would expect this period of volatility to sustain. And finally, I wouldn't call it the nail on the coffin. This is also the period when short-term hedge funds have to book cash profits to receive their bonuses, right? They can't go on their December vacation without having booked that cash profit. So they have to sell. Now what happens? Some people say, oh, I know my friend is going to sell in December, so I will sell in November. Everybody tries to be one ahead, a one-upmanship comes to play. So we are in for a fairly volatile period. And then it has been so confusing, right? You had Fed talking about a big out of turn 50 basis rate cut, market factored in 100 basis points. Suddenly the labor data, this data comes strong, and you are reversing the stand. So all in all, I think this is a period where it's good to be a spectator in the market, buy a 500, whatever, for the concert that's going up, Coldplay concert, sit on the sidelines, watch the market, be very careful about your money now. But once this period is over, right, I think all of these things will come to an end by the end of the by the October, December quarter. So I think that's where I would say this is the time to be cautious, a time to be a little bit contrarian, if I may say, because the sectors which have disappointed the most are the ones which have in the long run the best outlook. So to be a contrarian and say something hasn't done well this quarter, but I still buy, I think something will pay you dividends because you're going against the market, contra thinking. That would be helpful in this period, according to me.
That's right.
Sakshi, we have the ultimate insider of mutual funds now with us, who's very keen to divulge these details. कब fund manager बेचते हैं, क्यों बेचते हैं, किसका bonus आने वाला है, and what you can do from now on. Sunil ji, I am really looking forward to all these conversations with you. Now that you are relieved with a lot of corporate responsibilities, and you can come up with thoughts of practical brilliance that can help our viewers to make money. The other thing, Sakshi and Sunil ji, I wanted to point out was, if you remember last Friday night, we had the Israeli attack on Iran. My feeling is that the markets are lightening up ahead of the weekend. In any case, we had this end of account situations and so on and so forth, and of course tomorrow is Muhurat trade. So people will not be having an opportunity to sell tomorrow because the timeline of the trade is less. So this could possibly be one reason that they are fearing that Iran might retaliate. These things happen on the weekend only. Once they shut down Wall Street, और फिर मुसीबत हमारी आती है. But that's how life has worked over the last so many decades. So probably this is one of the reasons why we see weakness today. But 24,200 should hold on the Nifty, or at least I am hoping that way. Now Sunilji, comes the most critical part of the market. Of course, tomorrow we will also be seeing Muhurat trade and auto sales. They have been very tepid, and these stocks have been thrashed beyond recognition. Bajaj Auto, top loser. Hero Motors is down about 25-30% in October alone. What would be your thought process of about buying this dip in the auto space? Does it make sense, or you feel prices will correct more?
No, I don't think it's a time to buy on the rumor and sell on the fact. See, there's a rumor around, effectively it's an expectation that auto sales are not happening because you're hearing about stocks piling up in the inventory and a lot of things. But let's wait for the results, because the markets are factored in a lot. And hence, if those Diwali numbers turn out to be disappointing, there could be further correction on the way. So I would say another phrase to use, fools rush in where angels fear to tread. So I don't think it's the right time in the midway through a data analytical process where the data is not fully with you. You don't take calls on interest rate sensitive cyclical sectors, because they go sharply up or sharply down.
Sunil, we'll focus on HDFC Bank. There are two reasons why I will point this out. One, we have started to see some buying happen on HDFC Bank in the last few weeks or sessions after those 3 or 4 years of underperformance. Earnings have been well as well, and now there is this news that HDFC Bank's non-banking lending unit, HDB Financial Services, has filed for an IPO worth 12,500 crores, and HDFC Bank here is the largest shareholder, 94.6% stake, which will sell shares up to 10,000 crores, and a fresh issue of about 2,500 crores will be up as well. Of course, we'll be looking at this probably next year, before the time that we are right now in, probably maybe August or September. How are you really looking at this opportunity? Because this is going to be the first float in 6 years from HDFC Bank as well. Your sense of how should one be really looking at this bank now?
No, see, I'm one of the best professionally run institutions I've seen in my history, right? The merger with the parent led to a lot of different cultures merging, different type of a loan book, which they didn't have the asset liability mismatch happened. And I think because it had been so much part of everyone's portfolio that they had to correct it, because put together they would have been high. So I think the share has been under pressure for non-business reasons. I'm not sure that HDFC Bank business has suffered as much as the share price has suffered, number one. Now, if you're unlocking, see, in any company, there's an embedded value of the subsidiaries that are inherent in it, right? And in attributing the parent, there's always a discount which comes in. So when you start unlocking that value, right, and spinning off and going to the equity markets, you realize the true value of the institution. So I would welcome these kind of a disaggregation of the parent from these things, and it's a good move. And I think that the non-lending institution will have a good future. And I would say that all other things being okay, it should be a positive IPO to look at.
Okay, let's take a detour into prices. We are at 245. Another 45 minutes left for the markets to end. So we are down 122 on the Nifty, and Nifty is not the only loser. Sakshi, I was just looking at some monthly data, down about 7% so far in October, and this is the worst month since March of 2020, which was the COVID fall. In that month, the Nifty had fallen 23%. So this is how it is, ladies and gentlemen. And this fall in October of 6.3% so far is coming after 4 consecutive monthly gains. So June, the Nifty was up 6.6%. July 3.9%, August 1.1%, and September 2.3%. So October has turned out to be weak. This is now down 6.3%. Let's just look at some volume buzzers in the market that will give you an idea as to where money and price are moving in sync despite a broad weak structure of the market. Children's Hospital Rainbow, this is the top traded counter in terms of volume buzzers on the NSE 500, up 8%, 15 times 5-day average, which is now today 21.77 lakh shares. Grindwell Norton 3% higher, 2215. Cipla 9% higher, 7.8 times the volume. So these are a few stocks. Sakshi marks JWL, which is Jupiter Wagons, 7%, 6% higher, and 4.5 times the 5-day average. In terms of losers, you have AIA Engineering 2% lower on strong volumes, Biocon 2% lower, 1.7% lower on strong volumes, and newly listed Akam Pharma down 7% on 3 times volume. So this is how it is moving, ladies and gentlemen. And of course, in terms of Nifty, it's just LNT and Cipla. Sakshi.
Okay, let's get back to the conversation with Mr. Subramaniam now. Looking forward into the new Samvat, sir, do tell us any key trends, themes or sectors that one should be looking at which could now have their day in the new Samvat, new settings, new macro setup that will develop. What are you really looking at?
The first thing is that the US should go through a period of certainty, because whether Trump or Harris comes to power, their policies would be fairly clear and the impact of that. So it will be a less of a event-laden year than this year, right? Because the wars have also played their part in the past. So a more certain outlook in the new year for the US markets and economy. The IMF has also indicated a strong growth recovery for the world economy. So I think on that wicket, it's good augurs well for the new year. The second aspect here is the Fed's concern over inflation has eased considerably. So while the initial expectation of the rate cuts at a rapid pace may not take place, I would still argue for a 75 to 100 basis points rate cut spread over the year 2025. So RBI, I don't expect a rate cut in December or even in February, but during the course of the year, definitely a rate cut from RBI to keep pace with SEBI. So you're looking at a year with rate cuts. So when you have rate cuts, one, they're positive for equities. Second is they're positive for financials, right? Especially financials in the US, right? And so if something is positive for financials, then even in India also rate cuts will be positive for financials. So that's one pick that I say that for financial. And one of the reasons for that is, we talked about this month, but if you go back for a year, the Nifty is up about 25-27% when I last looked at it. The banking index is up only 20%. So it has not performed the last year up to its weight in the index, right? Now, the next year, I expect this to be the leader. Now, what's the reason for that? First is the rate cut scenario. The second aspect is that India's corporate capex cycle, ultimately next year will pick up. And the consumption, while right now it's not showing very good numbers, next year, I believe, our per capita income has now crossed $2,700 from the 2,200, 300 it was hovering on for some time. So I think that increased personal disposable income will next year translate into a year of consumption. I believe discretionary consumption should take. So both these aspects, the capital cycle and the consumption cycle, need bank financing to go forward, right? That's the new age. So I think banking, and at the same time, the shift from consumption to savings, which is seen in the SIP book of mutual funds, should benefit the stock market related participants, whether they are AMCs or insurance companies or wealth managers or broking houses. So I think BFSI, playing both sides of the lending curve, is a good play for next year in the context of this. The second segment, and I actually believe consumption will bounce back away from the recent correction. The second is, if the US recovery comes through and then the BFSI is going to be a big beneficiary, then Indian IT sector should benefit because they are the biggest buyers of IT products. So I would keep my overall focus around BFSI as the lead pack, consumption to follow a little bit, IT to be a safety-oriented element in the portfolio for the year 2025.
Sir, what is your view on the bright spark that we are seeing in banking earnings, both private as well as public, more so from medium-sized and smaller public sector banks? Do you think we've had enough of a sell-off in PSU banks? Any favorites that you would hear on the long side?
So see, to me, the PSU banking pack essentially depends on corporate revival. See, their biggest strength is their rural network, which has huge CASA balances, right? But at the same time, for lending to the MSME sector, they are the leaders and they know that segment very well. So I think MSME sector's lending will pick up only when corporate capital pick up, because they are ultimately suppliers, ancillaries to the capital goods and all of that. So for me, to buy a broad set of PSU banks, I would wait for a clarity on the corporate revival happening. But that being said, the larger public sector banks are very well run, efficiencies have improved, the mergers have helped their cause, and they would continue to be a pick. So in going down the cap curve on PSU, I would still wait and watch to see the corporate capex, private corporate capex revival come through. And one of the things that augurs well is that I think because of the election, the government capex had kind of taken the government had taken the foot off the pedal. And that leads to a lot of downstream orders which didn't happen in the current quarter. So I think as government also revives the capex going to the new year, you have a new budget which will allocate more money towards infra and capex for the next year. I believe that there will come a time when a broader PSU bank buying can come in. Not yet. Right now, stick to the top creamy layer of the PSU banks, and at the same time, in the same thing in the private sector banks.
Okay, Suresh, another pocket within the PSUs, the defense and the railways is what I wanted you to focus on. Explain to our viewers what has really changed for these two sectors, which were erstwhile favorites of all traders, investors at large. When they were, at their peak, there was still a lot of confidence among investors. Now they are down 20, 30, some of them 40, 50% also down, and yet the confidence is not returning with the way probably one would have imagined that if they give you an opportunity to take an entry 40% down, then probably it may be the best time to take an entry. But that kind of a confidence has not come back. What do you think has changed in the last 2 to 3 months for these two sectors, and how should one view them now?
So I think that first of all, the run-up happened for two main reasons, right? One was what you call the Modi factor, right? The expectation that the Modi government would reform the PSUs, support them with capital, make sure that the business gets a scientific allocation. There was a lot of optimism and euphoria around that Modi factor on that. Second was the excess liquidity in the market, especially notably from small mutual fund investors giving money in small and mid-cap funds. So what happened was, as you saw, there was a value catch-up rally which happened. And PSUs, historically, because it traded at a huge discount to the private sector, naturally, there was a lot of money flowing in there. And the story got built and got reinforced, and there was a rapid run-up. What changed? People realized that a single Modi or a government cannot change years of a PSU's existence, right? And the right way to judge the PSUs is in the context of the sector in which the PSUs are. So you have a metal-related PSU, you've got to look at global metal cyclicals where they are going. You have an energy-related PSUs because these two dominate the PSE index also, right? They are again a global cyclical. So I think global factors came and they made them realize that these energy and metals pack were under thing. Then when the private sector's valuation started coming down, the relative valuation the PSUs had to fall. And what then happened was the smart money, which is the fund manager's money, right? When they got money into a broad pool, when the certain specific mutual funds launched dedicated defense fund, energy fund, that all that money had to go into that pocket, and that's what made those share prices rise. But then once those were deployed, we didn't see any more of the NFOs in that space. The new money coming into diversified funds, fund managers started sector rotation. They looked at where have we made the most money, where is the earnings not really justifying it to the value catch up, and hence they sold off those stocks, because when FI started selling, good quality stocks started getting cheaper to buy. So you have to sell something to buy something, right? So those which had run up a lot without a totally fundamental sound logic naturally had to correct. Now, has the correction happened enough to again make them value related picks? No, not yet. So I would say that that's why fund managers are still cautious on buying this strong correction in those stocks. So I would say that until that smart money makes a move towards that. So that is until energy, metals, and all of those start looking up, and so their values look depressed, you will not see fund managers step in and buy. And when that happens, is when you will find that these sectors will again pick up. So at this point in time, I would say you'll have to wait and watch. It's a falling knife. It could end up cutting you or whatever. So stay cautious.
Right. This is a very sensible view that is coming in from Sunil ji. He's a veteran of 5 bull and bear markets, at least that I can recall. And there is no point in you trying to catch a falling knife, especially when it goes through you. So let it stabilize, let it sort of, maybe rise for a week. A reversal of 1 week on a weekly chart is possibly a good sign of re-entry at bottom levels. 258, we have 32 minutes left for this Samvat, and of course the battle for supremacy between the bulls and the bears is at 24,200. The Nifty 500 is falling lesser than the Nifty. These are signs that you should read. The Nifty small cap index is actually showing some strength as well. It may be in negative territory, but the fall is absolutely minor. Actually, the small cap index is in positive territory, 0.7% higher, 18,512. 61 points, 61 out of 100 shares are in the green. Midcap has slipped a bit, nothing much to be worried about. But again, it's the overhang of the possibility of a flare up in the Middle East that is driving prices. And one more important data I would like to point out: before the fall of the IT index for today, which is a 2.5, 3% fall, IT index was the only index actually that did not fall in the month of October. So this is something that has to be appreciated against the backdrop of very, very heavy selling pressure, in which the Nifty was down 8%, the small cap index and the mid cap index down about 10.5, 11% each. It was the IT index that did not lose even one bit in the last 22-23 sessions of October, and perhaps that is the sign to read which Sunil ji is pointing out, that the last bastion of strength is slipping on the Nifty. Sakshi.
Okay, got it. So Sunil, all right. I think Sunil sir has left, and we will now be welcoming Mr. Amar Singh, Senior Vice President Research at Angel One, to be with us on our special broadcast. Warm welcome to you, Amarji, and here's wishing you a very happy Diwali to the entire team of yours at Angel One and your family members back home as well. We hope this year turns out to be a great one for you. Tell us, how are you looking at the markets? The festive cheer is completely missing on Diwali from the D Street. When will things be back in action?
And the entire team and all the viewers are very happy and prosperous Diwali. So, see, we have to understand one thing is that markets are the way they are, and there's no way around it. And we have to accept it as an opportunity, because I would say, everything offers an opportunity at times, because earlier we were a lot of talk was there on valuations as to many of the stocks were heavily, I would say, highly expensive, and then we've seen some sharp correction on the back of concerns with regard to the slowdown in the quarterly earnings. So these are part and parcel of markets. We'll have it some way or the other. But at the same time, from a long-term perspective, definitely there is a lot of opportunity across sectors, be it the pharma sector, be it the IT space, be it the auto space, be it the metals, be it the banking space. But it requires that if you're looking at from a long-term perspective, then you'll have to give at least a couple of years, maybe 3 to 5 years on a medium-term perspective. But at the same time, there are definitely opportunities. We are the fastest growing economy in the world, and we'll continue to grow well. But at the same time, there'll be headwinds like the US elections is something which is, I would say, which has and can have an impact on global markets. We'll have to see which way it actually turns out. So these things will be part and parcel, and maybe it's just like the Indian Lok Sabha elections. If you remember, the results were not as expected, but even today, after the sharp fall, markets are still higher as to where they were that day, because from the lows of 21,200 or so, markets are still trading at 24,200. So it's up 3,000 points from the lows on 4th of June, despite the expectations not being as expected. So markets will behave this way. We'll have to accept it. There will be volatility at times, but at the same time, looking at it from a longer term perspective gives us better opportunities as well.
Right. Amarji, namaskar, and a very warm welcome to you. Festive greetings to near and dear ones. The problem in this argument is the US election one is that in June, our markets were volatile because the election was happening in India. Now, what you are saying is that the US election is impacting Indian stocks. Wall Street is at a record high. So, ये तो बेगानी शादी में अब्दुल्ला की पिटाई हो रही है. ये कोई बात नहीं हुई.
Yeah, so इसमें there are basically two things. One is that see, corporate earnings definitely are a cause of concern. So that is one factor which is playing on. And US markets, if you see, or the US presidential elections, that will have an impact more on the, I would say, IT sector space, because that's where if Donald Trump returns as president, maybe he's looking at more of America, make America great again. That sort of slogan is gone for Make in India, like we have in India. There it's Make in America, for American, by Americans, that sort of thing. So there's a cause of concern there, but that would have because see the challenge is that if you see the first tenure of his, there are a lot of tariff announcements, a lot of knee-jerk reactions, a lot of statements. So those things actually markets, not only domestically, globally also across the world, they don't look at, they don't appreciate such sort of ad hoc decisions. More of continuity is what the markets really want. So from that perspective, that could add some element of, I would say, concern. But yes, you are right in that sense that would have a limited impact. But primarily it's our, see, if you look at the FII selling, which has been relentless in October. So that means that something is definitely bothering them, or they are finding valuations on the higher side. They are moving to better opportunities because they don't have to stick to any particular country. They'll invest where they get opportunities with regard to the risk-reward scenario. So from that perspective, it definitely makes sense for them. As far as our markets are concerned, yeah, we will see, we are seeing some levels being breached. If 24,000 is breached on Nifty, then we could definitely witness some sharp correction towards 23,500 levels or so, because that's going to be the next major zone of support for Nifty. So we'll have to watch out for that.
Amarji, what are you expecting for tomorrow Muhurat trading session in the markets? Any key Muhurat trading picks that you would like to suggest to our viewers?
Yeah, I would say if you look at pharma space, definitely I would say one defensive sector which is holding out quite firm, because many of the pharma stocks and some of them are trading at record highs. I've spoken a lot about Piramal Pharma from almost 170, 180 levels. Currently, it's hitting highs, and still there's no sign of loss of momentum. So this is one good pick one can look at from a medium-term, long-term perspective. So any pullback, any correction is a buying opportunity, because from the days we spoke about it, the stock is up almost 40-50%. From those levels, and still there is more way to go on. So corrections one can look at this particular stock. Apart from that, there are other stocks as well one can look at if one wants to invest. Like for example, Nippon Life is again from the financial space. Nippon Life is one stock one can keep a close watch on. This is definitely very positive from a long-term perspective, as well as we are seeing some sort of consolidation there. We have a I would say view on this as well. So this also is one stock one can look at from a medium-term to long-term perspective.
So, I know it will be difficult for you to comment on Angel One because that is the parent organization where you work, but a lot of capital market related stocks, one that you mentioned just now, are having a very breezy time on the Lal Street despite all the negativity all around. Any brokerage led stock which you think has merit?
See, I would just talk here. I would say rather that overall, if we see where we are, I would just give you one figure that where we are as of today in the financial markets as a country. I'm talking about we'll see at least a 3 to 5x growth over the next 10 to 15 years. There's no doubt about it. So that throws up significant opportunities for all players, all types of players, be it exchanges, be it intermediaries, be it NBFCs. Only is that those who would be able to, because technology is definitely going to be a differentiator going forward. So those companies who are able to leverage technology and also legal and compliance perspective also, if you see challenges would come up from time to time for companies across sectors. So that is another hurdle which companies are able to actually manage. They would be in a better position to gain advantage. But yes, from a medium term to long term perspective, there's a lot of growth opportunity, be it the insurance space or be it the banking space or be it the financial intermediary space.
Amarji, how are you looking at the PSU banks particularly? Some of them have started to show some bounce. Especially stocks like Bank of Baroda, SBI, they are coming back on fresh radar. The earnings have been pretty good for some of them. Stocks like Indian Bank have rallied also. Do you think after the recent consolidation, now is the time to at least start looking at some of these banks in a big way?
So if we look at the PSU banks, first I'll talk about Bank of Baroda. Bank of Baroda did witness a significant rally. It was a multi-bagger from almost 36 levels. It reached to almost 300 levels. So it was almost a 10x, not a 10x, but a 9x sort of move which the bank had. So there were definitely various reasons. A lot of, I would say, NPA was written off, and then there was an opportunity for those banks. And if I talk about some of the other banks like Canara Bank, again, Canara Bank, we are seeing a pullback from almost 90, 95 levels. Currently, it's around 100, 102. So what's happening in the banking space in the PSU is that we are seeing some sort of, I would say, pullback, some sort of consolidation post the sharp correction which we have witnessed. So, for example, if I talk about PNB, PNB also has, most of these banks, they have corrected by almost 20%, 30%, they have corrected. So we are expecting a pullback, and on back of that, State Bank of India definitely is one which hasn't corrected much, has bounced back from almost 780, currently it's around 820. So banking space, if someone is looking at a PSU bank, then SBI is I would definitely want to keep a close watch on. This again is one stock one can look at, a stock SIP also from a longer term perspective. So that also would work out well.
Amarji, in this kind of a market, what is something that you will absolutely avoid, no matter what the valuations are? So what do you think is a standout minus in this kind of a market despite the correction? What would you want touch with a barge pole?
So if you put that question, see, basically, if you look at sectors, so some of the sectors like I would say FMCG, IT, pharma, these are sectors where we will find some opportunities, and there would be some stocks which wouldn't be worth entering. But to put it on a broader sense across sectors, I would look at those stocks which are, for example, where the promoters pledge is significantly higher. Those companies one should avoid. Then secondly, where there is any sort of controversy, or the company's quarterly profits, they are not, I would say, or the company is in loss and the share price is rising. That's again because there would be many such cases in a bull market that generally tends to happen. So one should definitely stay away from stocks. Don't get carried away just by the share price book. You should also watch out and look at the company results, quarterly results, how the company has been faring over the last few quarters. Is there a trend or not? Because one positive quarter does not mean that the company is doing very well. It has to be consistent. So consistent play is something which is very essential. Where that is missing, do not touch that stock no matter which way the stock runs, because that's more of liquidity driven rather than backed on fundamentals. So these are a few things. And lastly, I would say avoid or stay away from stocks which are in any sort of controversy or any sort of corporate governance issues at all. Run away from them.
Okay, got it. Now, Amarji, help us understand, how are you really looking at the mid and the small cap spaces? We do know that a large part of consensus has been building up that it is now the turn of large caps to outperform. But after the recent correction of 10 odd % on mid and the small caps, are some of the pockets here looking attractive, or is there more downside to go and more froth needs to be taken out from this place?
See, if you look at the mid cap and the small cap, we've definitely witnessed significant correction, no doubt about it. If you look at some of the PSU names in the defense space, in the I would say transportation space, that is air, or apart from that in different NBFCs or in across categories, we've seen some significant correction. And I would say that's a healthy correction, because generally what happens is that in a bull market, investors tend to get carried away, and then they realize that maybe valuations, the company might be very good, but at what price? That is the key question. So yes, now the stocks are, or I would say their valuations have come off, because anywhere between 20-30% we've seen some significant corrections, even 40%, 50% in some cases. We've seen corrections from the all-time highs of those stocks. That has definitely happened. So yes, one can look at it. Even defense space is a good space to get into, but you have to understand that more from a medium-term perspective. Why I'm saying that? Because markets are at very crucial support zone. So in case markets are basically waiting for how the US Fed actually behaves, what does the US Fed do in terms of rate cut? What does the RBI do in terms of rate cut? Is there a rate cut happening? What happens to US presidency elections and all that? So these are a few triggers which are going to have an impact on the markets, and that would and quarterly earnings, of course. These 3-4 triggers, and geopolitical tension, the last one, whether Iran directly gets involved and in which way and in what quantum. So these are 4-5 major plays which would actually drive not only our markets but global markets as well, because any I would say means upside in the tensions would lead to a spark in the crude oil prices, which could lead to inflationary concerns, which could again lead to the US Fed maybe pausing rate cuts. So those things are means they can't be ruled out, but there's always that possibility which is there. But markets, to a certain extent, have factored in that the geopolitical tensions in the Middle East is not going to really blow up. I think that is very clearly evident in the global markets and domestic markets there. So that's a plus. But yes, as I said, defense stocks, one can definitely look at. PSU banks also one can look at. But one needs to be prepared that in case there is a sell-off and Nifty breaches the 24,000 levels, then we could witness some sharp correction anywhere between 10 to 15% in many of the stocks.
Absolutely. Let's look at.
Sakshi, let's. Please continue. Please continue.
No. Yes, sir. Please tell.
Continue. No issue.
No.
Okay, I was just saying that now the last 15 minutes are left, and I believe 24,200 is what the bulls will retain today, and it's a half a percentage point cut on the Nifty, about half a percentage point cut on the Nifty Bank. Nifty 500 is flat. I think apart from this massive sell-off on Nifty IT, there isn't much to talk about in today's trade, because volumes apart from 2 or 3 major stocks have been subpar. HDFC Bank 1650 crores, TCS 1240 crores, Infosys 1037 crores, Reliance SBI less than 1000 crores, Reliance just about 1000 crores, 1030. So while we sort of feel a little bit off that Samvat 2080 is ending on a damp squib, but really it's been one of the best years on several decades as far as Dalal Street is concerned. I can't remember a time when the Nifty alone has added about 27% year on year. I am talking about 1 year back and today, and this is despite the 8 percentage point cut that we have seen. Bank Nifty is up 20%. I want you to hold your heart when I tell you the CPSE index, despite the correction that has come in to the extent of 9% in the month of October, the index itself is up 70%. So wonderful gains that we have seen over the last 1 year or so. The minimum gain is 13% on the Nifty private index over a 1 year, private banking index over a 1 year period, and the maximum of course is the Nifty PSE index, up 74% over the last 12 months, compared with a 10% fall in October alone. So a great year ahead, a great year that has sort of drawn to a close, and maybe this is the reason why such a strong bout of profit booking visited us in the month of October. Sakshi.
And you know, of course, Nifty 500 has been an outperformer of this Samvat, and there are many stocks that have actually zoomed over 200% in this Samvat. So massive wealth creation has taken place.
Absolutely.
And if we see the top performer within the Nifty 500, it is GETND. It has given a whopping 350% return to investors in Samvat 2080, and that's the kind of surge that we have seen. What we have also seen is that several other brokerage houses like stocks like Motilal Oswal have rallied up by over 300%. Trent is an outperformer that nobody can forget. It entered the Nifty, and within 1 month odd or so, the kind of rally that we have seen is stupendous on Trent. In fact, Trent and BEL are the outperformers on the Nifty for this Samvat. Trent, the Tata Group company, has risen over 270%. You know, not just that, there are several other stocks as well which have rallied. Godfrey Phillips has rallied over 200%. Irida is up by 200% after having, of course, declined quite a bit. Anant Raj, Hitachi Energy, these are the kind of stocks that have rallied a lot, Shell.
Yeah, and Sakshi, you know, we are limiting ourselves to these checks which have these stocks that are a part of a specific index. The point I'm trying to make is that, you know, a lot of multibaggers are up 15, 16 times. When you say look at Trent, let me just give you an interesting data for the moment. This is not loading, it will take a bit of a while, but you know, huge returns on stocks that have not been a part of any index, and they have run up rapidly. Let me just check where the screen has disappeared. I had created this data specifically for the last 5-7 minutes. Just allow me a minute to get back to you.
Sure. Absolutely. Meanwhile, we can ask Amar as to, do you think the outperformers like Trent can continue with the same kind of a momentum that we've seen in Samvat 2080, even in Samvat 2081?
I would say if you look at the way the stocks have, or trend for that matter, has risen, it is simply phenomenal. There's no doubt about it. But whether it would continue the same pace, see, ultimately it all boils down to the money flows which are there in the market, because at times you'll find that logic goes out of the window, and it is primarily the money flow or the liquidity which is driving the markets. So generally, if you look at that perspective, um, see, these are stocks which one can definitely buy and hold from a long-term perspective, but as a stock SIP, because at the current levels, what we are seeing in trend is that though the long-term trend is up, intermediate term trend, we are seeing some sort of consolidation there. But yes, on significant corrections, it is a buying opportunity till the time we don't see a trend change. And it's primarily, we'll have to keep a close watch on the money flow in the markets, the domestic and the foreign as well, because that is where the entire, I would say, you get a clearer picture as to where the money is actually going.
And Sakshi, I have the data that I was talking about ahead of trend. There are many stocks that have given multi-bagger returns, and some of them we discuss on a regular basis. I'm not sure whether we can show you Pondy Oxides or not.
Yeah.
This is a stock that Sakshi and I discuss often. It's given a 3.3x return, which essentially means the price that you see 979 in front of you is I'll have to do the math, but somewhere it was 250 a year ago, and it also includes a split in it. Inox Wind, something that we discuss very regularly, is up 3 times. Viatech Vabag, an order generating machine that over the last 3 odd months has done fantastically well, has given a return of 2.85 times. Newland Labs, 14,630, is up almost 3 times. And then Sakshi, you have IIFL Securities and then Motilal Oswal Financial Services. A newly listed NetWeb Technologies, whose IPO both Sakshi and I covered recently, has given a return of 2.6 times. And then Sakshi comes Trent. Not bad for a Nifty stock, 2.3%, 2.3 times the return. And then you have Power India, you have Anantraj. We talked about Force Motors, 2x returns in the last 252 trading sessions. So all in all, I think we need to sort of come out of our slumber and our negativity about October and rejoice this market. As I have said, Indian housewife has beaten all fund managers hollow. A 50% return on gold alone. No index has been able to match it. No fund manager, no equity diversified fund has been able to come up with that kind of a returns actually.
Absolutely. So, Amarji, do you think one should actually bet more on gold than equities in 2081, or will equities overpower gold in the new Samvat?
Oh, gold, definitely, because I very closely track commodities as well. So gold has been my all-time favorite.
Okay.
And I always say that some part of your portfolio definitely should be in gold. It could vary anywhere between 8 to 10 to 12%, depending upon your risk appetite. Because gold, if you look at gold when the COVID happened in March of 2020, gold prices corrected, but they did not correct as much as the stocks, because stocks became 1/10th, 1/20th, 1/30th, means it was anything. So gold is it's also a safe haven asset. It's a hedge against inflation. It is liquid money. It can never go down to zero. It has a historical value, and currently gold prices are trading at record highs, both domestically and internationally. Internationally, around $2,900. And the most important thing is that with the US Fed rate cut cycle, so any further rate cuts is likely to weaken the US dollar, which is again positive for gold. So from that perspective, it makes sense. And also what's happening is that a lot of diversification by HNIs, by funds, by ETFs, by central banks are moving into gold as well. So gold definitely will retain its shine. and one should look at having gold in one's portfolio, no doubt.
Okay, 327.
327, ladies and gentlemen. Sakshi, let's get Amarji to get a trade on the long or the short side for 1 year. So tomorrow is the new year, right? So anything, Amarji, you would like to carry for as BTST or STBT for the next 1 year, which of course is a calendar change between tomorrow and today?
Yeah, definitely. There are a few stocks. One you've just talked about, Newland Laboratories. That's one stock one can look at from a long-term perspective. The second is from the power space. That is Torrent Power. One stock one can look at from our medium-term perspective. Third stock one can look at, which I talked about, is Nippon Life from the finance space. Then one can look at Cummins India from the capital goods space, and one can look at Colgate Palmolive also from the FMCG space. So these are few stocks which one can look at adding from a medium-term to long-term perspective, starting from tomorrow.
Okay. Well, Amarji, on that note, we'd like to thank you for being with us on this last day of Samvat 2080. This Samvat, sans the last 25 days odd, has been pretty good, like we have discussed thus far, and we hope that even if the new Samvat matches it or nears it, we will be more than happy in the kind of returns that we have seen on the Nifty. So we're no complaints. Of course, the last 30 days have tested a lot of patience for investors, but for all those who have been very, very smart, this year has really turned out to be a wealth creating one. So we should give it to that one. Amarji, last word from you. Target on the Nifty for Samvat 2081.
Yeah, I would say that Nifty definitely has a potential to rally towards its all-time high, so we could witness some significant upside move towards 26,000 levels as well. On the downside, if we do see some correction, then somewhere around 23,000, 23,300, 400, that should act as some support, until unless there is something which is really unexpected. You can say a black swan sort of event if something materializes. Otherwise, we should be good. And we should always find some reason to be happy no matter which way the markets move. And because from a long-term perspective, there is definitely a lot of wealth creation that will happen. Having the patience and the discipline is something which is very important. Sticking to the right quality stocks and looking at an SIP mode is very important. Having a diversification into mutual funds, some ETFs, and a stock portfolio is very helpful. If we do some of these things, definitely we'll do good. Everyone will do.
Right, ladies and gentlemen, we have the close for Samvat 2080. That's 24,237, 104 points lower on the Nifty. The Nifty Bank has closed its account for the Samvat that has just gone by at 51,557, and the Nifty 500 is at 22,710. By all accounts, this has been a great financial year, and all of us at Business Today wish you and everyone at home the best that Diwali has to offer. May Goddess Lakshmi and Goddess Saraswati continue to guide us in the years ahead, and may we be able to see all the wealth that this market will create and benefit from it. Sakshi.
All right, with that we wrap up this very special edition of Market Today, the last one that we are hosting for Samvat 2080. But tomorrow we'll be back with a fresh edition when we will be starting our coverage on Muhurat Trading special at 5:30 p.m. So don't forget to tune in at 5:30 p.m. when we will be telling you everything that you can expect on the special Muhurat Trading session that begins at 6 p.m. and will be on until 7. We will be continuing our post coverage as well. For 2 hours, we will be with you to get you the topmost market voices around the world who can guide you for the new Samvat 2081. Viewers, it's been an absolute pleasure to be hosting market shows for you in this year, and we hope even better shows will be coming in for you in the new Samvat. With that, it's a bye from both Shell and me on this edition, but do stay tuned. Business Today Television has a lot more to offer to you, and you can see that on the screens right up next.
Well, let me wish all of your viewers happy Diwali.
Wish all of you a very happy Diwali. May you and your family have a happy, prosperous Diwali and a great new Samvat.
Happy Diwali, Shubh Dipavali to all the Business Today viewers, all my friends. May Goddess Lakshmi sort of endow you with lots of wealth and Saraswati endow you with a lot of wisdom. Have a great year ahead for all.
Wishing all the viewers of Business Today TV a very happy Diwali and a prosperous new year. Happy investing.
This is wishing everybody, all the viewers of BTV, a great Diwali. I know it's going to be a tough Diwali given the market situation, but the festival of lights, the festival of happiness, the festival of sweets, may God wish you well, and may the next year be as profitable as this year being. All good things happening, all of people. Thank you.
Happy Diwali to you also. Yes, it will be a good one. ऐसे ही तो सोचना है.
Wishing all the viewers of Business Today TV a very happy Diwali and a prosperous new year.
Happy Diwali to all the viewers. Wishing a very happy and prosperous Diwali.
Hello friends, wish you all a very happy Diwali and a prosperous new year. To all the viewers, have a safe Diwali.
Happy Diwali to all the viewers of Business Today from Indian.
Wishing all the BTTV viewers a very happy Diwali and a Shubh Dhanteras. May the new year be filled with prosperity.
Happy Diwali to everybody from everybody at Tata Technologies.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition on Business Today. We're going to be talking about LIC Housing Finance on the Q2 numbers that have come in. The company has reported a profit after tax of 1328 crore rupees. That's a jump of 12% year on year. The total disbursement